Okay, welcome back. 70 points, 18,828 is where we are at. Eight minutes to go for close. Jay Bala is with us. Jay, good to have you with us here. Thanks very much. There is some indication of weakness, but that weakness does not last, Jay. We got an indication last Thursday. We got one yesterday, but the market just moves on. Are you turning your view decisively to look for upsides here?
No, Prashant. See, the markets are, as I spelled out last time, if the markets were to take out 1887, that's still not a given. The markets came 7 points within the all-time high and then came down 220 points. But, the trend is still up. But as long as the Nifty is managing to hold 18,464 to 18,555, expect higher highs to come through. But in the event that the supports that I've mentioned give way, it can be, cataclysmic. So, but that scenario doesn't play out. Right now, the markets are still trending up. So watch out for higher highs as long as the supports that I mentioned hold up. But we are at the anniversary of the 15,183 low, and the markets are going back and forth around these levels. So it's an important juncture for the market. So it needs to be spent. When the markets take out 18,887, then we'll discuss how far the markets can go. I've already briefly spelled out last week.
Okay, Jay, hi. Good afternoon. So what's the sense? So far the Nifty has been confusing. Bank Nifty has been slightly underperforming. How would you look at that index for the time being? Is it looking weaker than the Nifty, or, is it still very much ranging action even there?
Yeah, definitely. See, the pivotals there, SBI and ICICI, they have broken supports on an intraday basis. But on the Nifty Private Bank Index, we have a lower high on a daily time frame. But even after that, we don't have a significant support breakdown. So we'll still be a little bit observant and cautious for significant support to give way. Until that, we'll assume the trend is still up. But these are warning signs that are still there. And I've spelled out several weeks back. Even the longer term picture for the banking index is something that cannot be drawn out as a expansionary trend. The upsides are pretty limited out there, even in the medium term. So, if the markets were to take out the all-time high, I believe we're either going to, do what 18,887 did to 18,604, or do a little more of another pattern. We'll discuss that later when the all-time highs are taken out. We have enough time to discuss that. This is not going to be a runaway bull market, and the sentiment is extremely lopsided on the bullish side. So the positioning is not favorable for continuation of an expansion.
All right, let's talk about individual stocks now, Jay, because we have seen a lot of these small cap, mid cap, individual stray stocks and some themes like insurance, etc., and defense surging. So amidst all of this, where would you put your money in terms of individual stocks? You have a list?
Yeah, definitely. See, the action is definitely outside the headline indices. And we have discussed several names here, like even the insurance name. I put out, a call on ICICI Pru, which was about 460. My objective was about 540 to 550. It's come there, and there are in defense name there are smaller stocks like Mishra Dhatu, and I've been bullish on FMCG space and capital goods name, and so BEL stands out there. So Everest Canto, that's an interesting name there. And last week we had even discussed Thomas Cook. So maintain these, trailing stocks in these interesting outside the main headline indices. That might be the way to play instead of putting in fresh money at the current juncture.
Any thoughts on these insurance companies, Jay?
It's pretty strong there, Prashant. ICICI Pru as well as ICICI Lombard, they still have continuing momentum. I don't think they have peaked yet. We might still see pullbacks getting bought. So I think at least we have a sequence of at least another higher high to come through. But I'm not too sure if it's going to outperform if the index were to cave in. But if the index were to take out the all-time high, I think these will be the names that will expand on their recent move from May.
HDFC AMC, have you looked at the charts?
Yeah, very interesting chart, and it's got an outstanding breakout today. So from a risk reward perspective, it's not a best take at this point. Wait for a pullback, but if you're already wrong, you timed it pretty well. So yeah, it's probably 2400, 2500 on cards for HFCMC.
Okay. Before we let you go, any final thoughts, Jay? You want to leave us with, anything interesting you're picking up in terms of global market action, whether it's U.S. In equity indices, anything you're picking up on the dollar index, patterns worth noting?
Yeah, definitely. The dollar index has got some cross currents there. It's quite strong against the JPY, whereas it's weaker against the euro and the pound. So the pound, in fact, particularly is quite strong. And the pound and euro might keep the dollar index suppressed for a bit. A drop below 100 could be okay, but in the medium term, it's going to do reverse in the direction of what the JPY is saying. When it comes to the US equity markets, last week at close, then the percentage of bullish traders on the S&P futures were standing at 93%, and on the S&P futures at about 91%. This is the level at which the November 2021 highs were clocked. The index is 8% lower, but the sentiment is at the level where the market were 8% higher. So the markets trigger. The markets are just waiting for a trigger. The cannon has been loaded. The fuse is missing. When the fuse lights up, this is going to have a very sharp decline.
You're scaring us now, cannon, fuse, but it's a view, and we'll see what happens with the US.
Yeah, very important,
as well.
We don't preempt the trend. We just want supports to break down. Until that point, assume that the trend will continue. But once the support gives way, that only then we act on it. Until that point, it's foolish to stand in front of the trend.
No, there is actually, in the US at least, there is a fundamental trigger, actually a technical trigger as well. In the next 1 month, we'll see a very large contraction of liquidity in the US as the Treasury there rebuilds its balance sheet because, they're out of money. They need to rebuild it. So we will, now who will absorb all those bonds, etc., is the question, but we will see that over the next 1 month or so. And that, according to some, is a shock to the system. Impact on equity markets, we'll wait and watch. But thanks very much, Jai. Great speaking with you. Appreciate you joining in and speaking with us here on CNBC-TV18. 80 points, by the way, high.